if you look at the hash rate of the network back in the first quarter, there was a point when the hash rate got to like 190 or something. And I thought the peak was 170, but there was a surge up by about 10 or 15 exahash. If you look at the hash rate of the network back in the first quarter, there was a point when the hash rate got to like 190 or something. And I thought the peak was 170, but there was a surge up by about 10 or 15 exahash. And I posit that that surge was because people turned on third generation mining equipment, like the oldest, least efficient stuff. And there's a relationship. An S19 is generating 40 cents a kilowatt hour right now. Ergo, it is profitable to buy electricity up to 39 cents a kilowatt hour. An S9 was 5 times more inefficient. So S9s were profitable at 8 cents a kilowatt hour. But if you go back one generation before that, if you're 5 times less efficient than that, you're profitable at 1.5 cents a kilowatt hour. So the break-even point is a function of the semiconductor, or the joules per terahash, right?
Right.
And that's a technology driver. It's not an energy driver.
Yeah.
And most of the people that model Bitcoin mining, they don't really focus upon the technical efficiency of the miners. And by miner, I don't just mean the one mining rig. I just mean the mining operator that has a mixture of first generation, second generation, third generation equipment.
Yeah.
The price, and you may turn off. Like if the price of Bitcoin went to $5,000 a coin right now, people would probably turn off the old mining equipment if they had to, unless the energy was free, right? You can bootleg Bitcoin on free energy if you're stealing the energy. But if the energy costs 3 cents a kilowatt hour, you're gonna turn off your old equipment. You're gonna keep the new equipment running, and that's an adaptive correcting system itself. When the price goes up, you're going to turn on the old equipment.
Yeah.
And over time, though, these are transient phenomenon, because the more important phenomena to focus on is that over a decade, the technical efficiency of the mining network is going to increase by a factor of 20 to 100. Depending upon the rate at which people upgrade the semiconductors. Sure. I've called it the 7 layers of security. But I think we should start with a fundamental observation. What we're trying to create with Bitcoin is a digital property network, something that will last for 1,000 years or 10,000 years. How do I create digital property in cyberspace? And we can call it money if we like, digital monetary network or digital property network. But what I want is a decentralized network that will last past the average life expectancy of a human being or an institution or a nation state. So, how do I do that? Well, with the beauty of proof of work is that the network derives its integrity from the interplay of the miners and the nodes and the holders, or the wallets, if you will, but with a special emphasis on the miners. What do I define as security? Well, property needs to be optimized for integrity and durability over time. Integrity meaning the protocol can't be corrupted, right? Can't mutate. If the protocol mutates, we go from 21 million to 48 million, you get a monstrosity. So you don't want a mutation, and then I don't want it to die. So if I said I want to design an immortal creature, something that'll live for 1 million years, and I want it to maintain its integrity, then I've got to protect the protocol, and then I've also got to feed it energy and resources continually. And I'm just going to call that, and I have to protect it from a hostile attack in the near term. So a lot of times when we think about security, we think about just avoiding an attack, but really security is you can't attack in the near term. We don't want it to die. And most importantly, if you live, but you go insane or you get a grotesque mutation, then did you really live? So how am I going to achieve my quest for immortality in a network, right? And the beauty of proof of work is it is an open protocol that is Darwinian and competitive in a way such that it is not just self-correcting on the protocol level to ensure correct money, but it's also self-healing and it's adaptive to the environment around it. So I like to call these the 7 layers of security. So what do you have? You have an energy layer, a technology layer, a political layer, a financial layer, a network layer, a spatial layer, and a temporal layer of energy. Those seven various dimensions. You know, there are a lot of ways you can enter into the network and you can disrupt the equilibrium. One way is as a nation state, you can start mining off of a volcano. The other way is you can design a totally new family of ASICs. So, you know, maybe Intel or Apple wants to get into space. They could disrupt it. A big energy producer could disrupt it. Right now, the limiting factor is the number of mining rigs you can get your hands on. That's good, right? That creates some predictability to it.
Yeah.
And that keeps us from going chaotic. So if you look at these 2 layers of security, right, the energy layer is co-opting energy providers all around the world, and the technology dimension is co-opting semiconductor manufacturers. And if one of them, like Bitmain, gets too much power, you know, Jeff Bezos' famous line, your margin is my opportunity.
Right. Yeah.
Right. So if one company gets too much power, then, well, this is not terribly complicated engineering.
Yeah.
I mean, you know, it's well understood how to design SHA-256 ASICs.
There's a capitalism difficulty adjustment.
Do it. Yeah. Yeah. And there are a lot of companies like Qualcomm, Intel, when they get squeezed, they need a new market. This is a new market for them at the price, you know, as the price goes up. And the interesting thing, of course, is if there's only one provider of SHA-256 miners, Bitmain, doesn't that create an artificial scarcity to hash rate? And if there is a scarcity to hash rate, doesn't the price go, you know, the profitability of Bitcoin miners goes up, right?
Right.
You know, and so if the profitability of Bitcoin miners goes up, then don't more people want to get in the business? And if more people want to get in the business, don't they need to buy Bitcoin mining rigs? And if they need to buy it and there's infinite money, don't they go and find someone else to break that monopoly?